Muthoot Capital has reported a 94% jump in its September quarter. And profits, of course, what have been the key highlights for the quarter gone by? Let's ask the management. Joining us right now is Vinod Panikar, the CFO of Muthoot Capital Services. Vinod, good morning and thank you so much for joining us. While we have seen strength in your quarter, and of course, the stock has also been holding up right now, we have been reading about reports about a potential slowdown in two-wheelers and a possibility of slowdown in financing these two-wheelers. Can you tell us a little more about how you are reading the traction on ground?
Good morning to you and your viewers. Thanks for having me on your call. This quarter, as you rightly said, that went by was a very good quarter. The numbers were good. The growth was there. Though because of the devastating floods in Kerala, the numbers were slightly muted. It could have been much more. But we still grew on a quarter-on-quarter basis and also on a year-on-year basis, both in terms of distribution, both in terms of disbursement and in terms of the loan book growth. In terms of the income growth, and definitely you rightly mentioned about 94% growth in the profits. Going forward, we are, in fact, as of date, we are not seeing any kind of pressure on us. While the September numbers have gone by, the October seems to be reasonably okay, and after the end of a quarter, the volumes now will pick up in the second half of the first month. So we are seeing kind of some bit of growth coming up, and we are fairly confident of the disbursement happening, the portfolio holding up, and at the end of it, the company meeting its guidance that we had committed at the beginning of the year.
Vinod, you spoke about the Kerala floods. What has been the impact in the second quarter, and how much residual impact is left for the balance of FY19?
Maybe fortunately the residual impact I don't see much. Now maybe to tell you what is the impact of the Kerala floods, we did see a bit of impact in the month of August, and when the collections went down significantly, NPS went up. In fact, on the 27th when we had a con call with the analysts and the investors, we had actually mentioned about that, saying that we expect a 20 crores kind of growth in the NPA. Fortunately for us, the NPA numbers, overall numbers went up by about 17 crores. Major part of it was in Kerala, which was about 12.5 crores for the full quarter. The numbers went up in the month of August. They came down again in the month of September. The collections was maybe at a 6-month peak kind of thing. October seems to be just taking forward where September left. So we would be fairly confident, and we would say that there is no residual impact which is left out. In case something happens, that could be very negligible, not something which the business, which is not a part of the regular business.
So by the end of the year, how do you see the NPAs moving out for your company? What's the GNPA in Q2, and by the end of the year, what will this number be at?
GNPA on an absolute number basis on the total book was about 121 odd crores, which was about 5.6% of the total overall book of about 2,515 crores. We have committed on the GNPA being at sub 5%, and we are confident that that will happen by the end of the year. That's number one. And more importantly, here one thing which I would want to emphasize on is the NNPA has been going down significantly because of the higher provisioning that we have been making. The NNPA at the end of September was at about 3.5%, and we see that number going to about 3% by the end of the year.
Okay, Vinod, the final question on liquidity and challenges with respect to liquidity. I believe there are some changes with respect to your outlook as well. Can you tell us a little more about the on-ground situation and what we can expect as we move in, perhaps a number on the guidance going forward?
On the liquidity front, let me put it this way, that we are reasonably liquid in the sense we have always dependent on the bank and securitization transactions and public deposits to actually do the major funding. Roughly 95% of our funding happens that way. We had very little exposure to money markets, which possibly was the biggest beneficial, or which was the biggest or the best thing that we could actually do. And that is why we feel that we are not, I would say, impacted very negatively in spite of whatever we are seeing in the overall market. We don't see any major challenge as such going forward in this quarter, or for that matter next quarter. As of date, we are still confirming the numbers that we had committed at the beginning of the year, which we had said that we hope to grow our book at about 35 to 40% on a full year basis, which is what we are committing. We had said that we will have a decent profitability significantly higher than what we had for the whole year last year. The first two quarters, if numbers are to go by, we are on that path and we will achieve that. So guidance wise, we stick to the guidance that we had given at the beginning of the year and what we gave last quarter. So we don't want to change anything. We are confident that the liquidity will be there. We are confident that the cost would be managed, and we are confident that the company will achieve its guidance.
Okay, Vinod, thank you so much for joining us and telling us all the details, and all the best for the quarters going ahead.